So let's talk about the cost versus profits going into 2025, if cryptocurrency mining is worth it at this point, in my opinion. As we have a more push towards kind of mining farms going on, I think that gap is closing very quickly for people to have profitability as the hash rate and difficulty increases on the network. So a lot of people are going to be pushed out, and those with the electricity rates are going to be pushed out even further. So today we're going to kind of be discussing around how that works out. So we're not necessarily doing cost versus profitability, that's just a nice title. But obviously to get into crypto mining, there is the initial cost, and that is the miner. So we have all the Bitcoin miners here. As you can see, this S21EXP costs around $12,000. The one below it, $6,500, $6,700, $5,800. And these prices are going to continue to go up as time goes on and Bitcoin becomes more profitable to mine. So we saw this in previous bull runs. As Bitcoin or any other coin kind of goes up, you can even see it for Litecoin here. Let's wait for this to load. This L9 is around $12,000, but it will continue to go up in price as the coins get more profitable to mine, just because the ASIC manufacturers or the people that are supplying it can demand a higher price for these miners because they're producing more profitability. Now there is some talk about smaller coins like Casper, Ethereum, Radiant being pumped in price to appear to be very profitable, so that these companies can actually sell off for a better price for the miners and they can offer better profitability rates and say that they're making $20 a day, but by the time you get them and everyone else is on the network, they're only making $5 a day. We've seen this with the Ethereum miners. Let's just try find that down here. So currently the AL1 Pro is bringing in $5.67 per day, but it was originally bringing in around $20 a day, I believe. If we click in here, maybe it'll show us on the chart. Perfect. So right here, it's even at $6.8 a day, and it drops all the way down to 5.67. This is because I believe all the AL3s are coming online, and that's going to push out profitability for all the miners. So it is kind of a cat and mouse game. Either you're mining Bitcoin or you're chasing profitability on any other coin, apart from maybe Litecoin and Dogecoin. Now, when it comes to cost of miners, you can be paying a range of costs for miners. So even this one is around $20,000 that's actually in stock. So $20,000. However, it was advertised, if we go back here, I think it was $12,000. So even if we click on the L9 here, that was for the S21E Hydro, I believe. If you click on the L9, you can see you're paying around $12,000 for this, and I believe that this is just going to keep going up. These are coming from China, so you will have to pay more for customs and stuff like that. So if you can get it in your country, then that's way better. And the payback time is listed there. So payback times, these are actually relatively good. Anything under a year is pretty good, but you have to calculate in how long it's going to take to get to you as well. So maybe that could take 1 to 2 months. If it gets held at customs, it could be longer, which means you're missing out on profitability. So the cost is one thing, and ASIC miners are just going to continue to increase in cost as the price of coins go up into 2025. So I wouldn't recommend buying any of those right now. So if you are going to get in, start with a very low cost ASIC miner, and hopefully you can ROI by the time the bull runs over so it can continue mining. But it is kind of a risky play at this point. All the people that have really been seriously mining kind of bought their machines way back and are not really buying machines at these higher prices that we're seeing right now because they got them for around half the price 6 months ago. So the cost is definitely increasing for ASIC miners. However, on the GPU side / CPU side, the prices of these aren't necessarily increasing as time goes on because there's no real need for GPU or CPU miners necessarily anymore. With the Ethereum merge coming out, there was a drop in prices of GPUs because the hardware wasn't really used for anything and a lot of people were just dumping them onto the market, which means that they demanded a lesser price because there was more on the market. However, over time, we have seen the emergence of AI, so GPUs are actually staying relatively stable in terms of prices. They're not really dropping below MSRP for the newer models, and they're not really going above that for resale either from scalpers. And we don't really hear about them too much anymore, just because the Ethereum merge is kind of done and over with. So the cost of mining hardware is going to increase for ASIC miners for GPU and CPU. Personally, wouldn't recommend getting into it now, but I don't see that they're going to increase too much more in the future. and they might even come down in price for secondhand resale. So let's move on to the profitability. As you can see here, if you don't know, profitability is basically strictly done on the electricity cost. So right here we have 10 cents per kilowatt hour. And as you increase this, the profits go down per day. So we're increasing and the profits are going down and the payback time is getting higher. So as payback time gets higher, that means it takes longer to return on your investment. Once you're mining and you've returned your investment, that's kind of when your profitability actually starts to happen. So let's say that your return on investment is 10 months on this L9. By the time you get it, and it's 10 months down the line, that's when you'll actually be making profits on the miner. So as I said, electricity cost is one of the main massive things in mining, pretty much more than the cost of a miner as well, because even if you can get a miner at a good cost, you don't necessarily have the electricity rate to make it as profitable as some other people out there. For example, a lot of the mining farms have way lower electricity rates going into 2-3 cents per kilowatt hour. However, the main residential / home miners will probably get the lowest even rate of around 10 to 12 cents per kilowatt hour at the lowest point. So it really does depend on the electricity prices around the world, and this is kind of why you see miners flock to these havens of lower electricity rates, just because it's way more profitable. And even if you can get a decrease of 5 cents per kilowatt hour, over a massive farm, that adds up quite a lot, because you could have multiple machines that are making $10 a day, but if you reduce it by 5 cents per kilowatt hour, you're then making an extra $5 a day off of that. And as you go down, it obviously gets to zero, so you can have basically pure profits. But not a lot of people have free electricity in that regard. So right here we have an interactive map. This is from Q1 of 2024, so they might be off. Canada obviously being the best one, we've seen it over time. Probably one of the best ones for crypto mining, because it also has the added benefit of being cold, so you don't really have to worry about temperatures. A lot of people in Texas do have to worry about temperatures, but I know in the USA, Texas and Louisiana, I believe, are the lowest in terms of the electricity rates. So you have two good ones here, and that's why you see a lot of miners congregating here. In Europe, there's not really many good places that you can go. Even Spain is high, France, Germany, a lot of them are very high in electricity rates. If you really wanted to go somewhere, Norway would be kind of the best in the Europe area for mining. And then as you go down, you obviously have Russia, Kazakhstan, which is famous kind of for having a lot of crypto miners, and China. So these big three here, back in 2021, mined a lot of cryptocurrency just because of their low electricity rates and the climate as well, so it's very good. Surprisingly, Australia has a high electricity rate, even though they have a lot of natural resources there. There are a couple in this Middle Eastern region, but I don't believe that there's a lot of cryptocurrency mining going on there. And then there's some down in South America. Mexico actually has a very good price on their electricity. I don't know how verifiable that is, though. The lowest in South America, I believe, is Argentina, which is a pretty good rate, as you're looking at maybe 2 cents per kilowatt hour down there. Venezuela, you're looking at 4. But if you are on this kind of border from the USA to Canada, it'd be way more beneficial. You can save quite a lot just in power costs by moving to Canada. So it does depend very geographically on where you are and what you want to mine. If you are going to be ASIC mining and you buy a bunch of rigs and you're in one of these European countries, let's say, it might be even way more beneficial just to move all these miners to host them in a different country, or at least move them, maybe buy a bit of land in Norway or Canada or the USA to actually host these or use or utilize a way lower electricity rate. So to answer the overall question in the video, is it worth it to keep mining in 2025? Yes, it definitely is if you're in these kind of golden regions, I'd say. Even in the USA, a lot of them do have high prices for different states. But as I said, Texas and Louisiana have very good power rates. Canada, pretty much all of it has good power rates. And there's a lot of negotiation that you can do with suppliers and providers. I know in Europe, there's not as much negotiations to get a lower price that you can do. But in Norway, it seems to be the best place to go there. So I would regard Canada, USA, Mexico, Norway, Russia, Kazakhstan, China, and some of this Middle Eastern region as a golden zone, and then maybe Venezuela and Argentina as a golden zone for power as well, maybe even Brazil and the surrounding countries. So definitely worth it if you're in any of these countries. If you're not, the second best option would be to host it. Also start off with a very, very small priced ASIC miner and then build up from there. See if you can ROI on something first. So that's the main thing, is ROI on one machine first and then roll those profits or roll that money back into another miner, continue, repeat, and the ROIs will get quicker and quicker and quicker. And sooner or later, you'll have a lot of miners that are producing profitabilities. That'll probably be in the bear market in the coming years. And then that's normally when a lot of these miners build up their facilities and all of their hash rate in the bear market for this bull run that comes every 4 years. Also, the hash rates are increasing, so keep that in mind. If you want to know anything else about mining or have any questions, drop them in the comments below. Make sure you like the video and subscribe for more content like this.